Oil prices, of course, at this time rising. Brent crude now is above $80 a barrel, 81.48, up by 3.1%. West Texas Intermediate at 77.53. Even natural gas is up as well. This on the back of the missile exchange between Israel and Hezbollah in Lebanon, which has been backed by Iran. Israel, of course, preemptive strike based on intelligence that there was an attack coming from Hezbollah targeting the south of Lebanon. We spoke with the CEO of Crystol Energy, Dr. Carole Nakhle. We asked her 3 questions, one of which her thoughts on whether geopolitical concerns will continue to be a trigger for oil prices going forward. Also, the issue of the International Energy Agency and their outlook with respect to what battery prices falling means for energy going forward. Here are her thoughts.
We have seen some interesting developments on the geopolitical front back to back in the last few days, and they have exercised some kind of upward pressure on oil prices, the levels that we are seeing today. And if I pick up on those geopolitical developments, of course, the attacks that Hezbollah and Israel traded come in the number one. And then you do have before that the Red Sea attack, the Houthis attack on an oil tanker as well. In addition to that, we have Libya announcing it was going to hold its oil exports and production because of dispute with the government. So on top of that, you have the ongoing war in Ukraine between Russia and Ukraine, and also things are escalating over there. So if I look at this cocktail of problems, I can understand how they can create a sentiment of fear in market. Add to that the economic signal of the Federal Reserve in the US announcing that actually it was their chairman who said it was time to cut interest rates, but the question is by how much as of September and next month. So when you look at these factors together, everything else being the same, we can understand the upward pressure on oil prices. However, we still have not seen any major supply disruptions. The tensions in the Middle East have not escalated beyond those two usual suspects, that is Hezbollah and Israel. And actually, for somebody like me who comes from Lebanon, it does not, well, from the outside, when you look at it, it sounds too critical and too worrisome. On the ground, it's not as bad as perhaps you would get it from the like an external outside observer. But hopefully it will not go beyond what we saw recently. So maybe if things don't escalate any further and no other major development happens, we should expect to see prices easing in the coming days. But as long as we have this kind of cocktail of geopolitical developments happening at the same time, we should expect to continue to see volatility in oil markets within the range that we have seen in the last few weeks and few months. Fundamentals will always drive oil prices and oil markets, because at the end it's about supply and demand, especially when you're looking at beyond those day-to-day noises and volatility. Of course, traders will be following those movements up and down. But if we look at the whole market, the whole market direction, especially in the longer term, it goes down to demand and supply. And the picture there has not changed significantly. There have been some interesting data points published recently, particularly coming from OPEC, whereby we saw in their August oil market report for the first time this year, they downgraded their demand growth forecast for this year. It was not major, 135,000 barrels a day, which is not dramatic. Nonetheless, it is a downward revision because, mind you, OPEC has been and still is the most ambitious organization, its forecast for oil demand growth. On the supply side, yes, we do have a healthy growth outside OPEC Plus, but also the same report by OPEC showed there are some members within OPEC Plus which are still overproducing. The usual suspects like Iraq and Kazakhstan have overproduced, although they have promised to compensate for that overproduction. But I have the feeling that old habits die hard, especially with countries like Iraq. So on the fundamental side, we do have not so great demand growth, especially with the weaknesses in China. Yes, even if the Federal Reserve starts to relax the interest rates, which stayed higher for longer, it's unlikely to result in a massive boom overnight in the economy. And on the supply side, we do have a healthy growth and also overproduction within OPEC Plus. Add to that the group is going to put more barrels in the market, as they announced a few months ago, as of the fourth quarter of of this year. That is not cast in stone, but assuming they are sticking to their plans, that I don't see high prices staying with us for a long time, assuming the geopolitical situation does not escalate any further. The IEA latest publication on battery storage costs and electric vehicles does not surprise me. I mean, this is something you would expect from a sector where investment has been growing, has been focused, has received tremendous government support, and there is a growing demand. So we do achieve efficiency gains over time, costs do come down, and there is this numbers like an expansion, that double-digit growth or cuts or changes, if you want, in the numbers. They are quite eye-catching and they are tremendous. But at the end, we want to look beyond those impressive figures and remember that we are starting, for example, with electric vehicles from still a low base compared to the conventional vehicle fleet that is out there. So we're talking about billions of cars out there versus millions of electric vehicles out there. And also for the battery storage cost, yes, it's a great reduction in the cost of production. But at the end, does that mean that we're going to suddenly use batteries everywhere? This is where we have to think about the expansion, the exponential expansion that is needed for the energy transition. And this is where we start having bottlenecks and problems in terms of the supply chain, starting from mining for more metals and minerals to produce those batteries, and whether that could keep up with the required growth in supply to achieve the energy transition targets. That is something separate that we need to discuss from only focusing on the reduction in the cost of battery storage. So it is an impressive development, but by itself, it does not tell us the full story in terms of where the energy transition is heading, whether it's really accelerating in line with these figures or not, or we still have a long way to go. And I tend to subscribe to the latter scenario, hoping that these kind of the reductions in costs will continue. But like with any other economic sectors, you do reach a bottom, and then actually you may have a reversal in the cost if we face some serious supply chain bottlenecks.
All right, that was Dr. Carole Nakhle, CEO of Crystol Energy.